guys, guess where I am? I am in Spain on holiday, and this is Toledo, the square of Toledo, but you're not here to talk about my holidays, you're talking about the stock market. So the stock market is moving higher. So is it time to go all in the stock market, or is it time that the market is gonna crash? Well, let's talk about it in this video. First of all, let's understand what is happening in the stock market. Okay, so first of all, the big cap stocks, so we're talking about the Tesla, the Apple, all the stocks having a very large market cap are going up, and that is to the detriment of small cap stocks. So we're talking about stocks with, for example, the stocks that unfortunately I talk about quite a lot. So we are talking about IDEX, we are talking about Gevo. Those stocks have been taking a massive beating. So in basically one of the reasons, there are three reasons why this is happening. The first is that the IMF data has come out, and that is a measure of how much debt companies, privates, lots of other, basically all the institutions are taking up an incredible amount of debt, even higher than before. So this is basically, I'm just gonna put myself here in this corner so that, oh, that's quite dark. But yeah, basically they've been taking so much debt, and basically it's at all-time high. They feel very confident. Why? Well, it's quite simple. They feel very confident because, and they're investing all this money in the stock market and crypto because of two reasons. Well, the Fed announced a taper, and that was back in November. So they announced this taper, and they actually told us even in December, just a few, well, about 20 days ago now, they told us, oh yeah, we're gonna taper even faster. We are gonna really cut our supply of money into the bond market. They announced it 2 times then. Well, this taper, it's not happening. So I'm gonna leave the basically a couple of links in the description so that you can go and check for yourself. I'm gonna link the basically the data of the IMF in the description so that you know that it's true that the global debt is at all-time high. All institutional investors have been borrowing increasing amount of money. And again, you're gonna get also the link to the Fed balance sheet, and you can see that even though they've been saying, yes, we're gonna cut even more, there hasn't been any, I emphasize any change. So they've been saying, yes, we're cutting, nothing has changed. And so what is happening is very simple. The institutional investors are saying, okay, let's just keep pushing the stock market higher and profit for as much as we can. And let's wait until the Fed really starts the taper and benefit from higher bond yields, because when the taper will really happen, because it should happen at least in January. It's incredible that the Fed is just saying, yes, we are tapering, and it's done nothing. So we should be seeing a much stronger response of the bond market in January. And this is very important. This is very important for the strategy and what I'm about to do in the near future. Now, it will happen that the taper has to happen because inflation will not stop. Like, inflation is just not a story that I'm telling you or that you're hearing from newspapers. You know that as well. The price of everything, including your utility bills, so your methane, your electric bill, sorry, you don't call it methane, you call it gas bill, and everything, your power bill and everything is just going up. And that is because commodities, the price of commodities is going up now. And obviously food and everything is going up. So that is not just, I don't know, something that I'm making up or everyone is making up. It's obviously happening. So they have to really start this taper. And so what I'm expecting to happen, well, if you still want to trade, well, probably it's still a good time to trade. But if instead you are a long-term investor like myself, maybe you are actually thinking of buying more now for the long run, and I'm thinking maybe long run would be like 2-3 years, perhaps not a great time to buy. And in fact, I'm not doing it. If you instead you're really looking for the long run, so in 5 years, yes, long run 5 years, it's fine. Sorry, maybe it's gonna be a bit louder because I'm literally in the streets of where am I? Toledo. There you have it. So basically, yes. So all eyes will be on two things. So the market could still be very bullish up until we have our CPI data. And so we're talking about inflation data. It's called CPI, and it will come out in January. So we'll see those data first. We'll talk about that data on this channel as well. Very important because the Fed will act on those numbers. And that's the second thing that will actually change everything. So if the Fed, when they have their meeting in January, comes out and says, guys, we really have to taper now. Now the end won't be March, it will be February. So they really start cutting for real, and they keep moving it forward, then at that point, we really will see some intense market drop. And so what I'm thinking, because you need to understand what your goal is. If it is for the short term, literally 1 or 2 years, and I told you about that earlier, and that's exactly what I want to do. I want to use that money, all that money, and actually I'm gonna borrow as well, I'm gonna get a mortgage as well to buy myself a property. Because I'm not like a high flyer like Meet Kevin or Graham Stephan or all the others. They have lots of money. They can say, oh yeah, leave it in the stock market because, you know, you'll be fine in the long run. I cannot do that. You need to obviously have the money. In my case, I need to plow everything that I have to buy myself a property. I'm not that rich, okay? So, yes, so for the short term, if you want to trade, probably it might be still okay for 1 or 2, maybe a few weeks until we get to the next Fed meeting. And then we will see some volatility, some maybe pullback as well. In the absolute best case scenario, will be okay all the way till March, which is when we'll see the end of the taper, and we're gonna raise interest rates. So if that's the absolute best case scenario, and yeah, so this is what the future will be. 2022, I see it as completely in one of the riskiest years to invest, especially if you're thinking of starting right now. Absolutely. If today is your first day in the stock market, I would just wait and see. Because especially if you are thinking of turning a profit in 1 or 2 years, absolutely don't get in. Sorry. And some people might leave in the comments that this is just incredibly bearish, but I swear to God, this year will be insane. That's what I think. So 2022, until March, we can see what is going to happen. After March, it's going to be, I expect it to be incredibly choppy. We might see one of the biggest pullback in the stock market, one of the biggest stock market crash that we've seen in recent times. So prepare for that. And I am preparing for that. And if you want to join my Patreon group to support my channel and know everything that I do, buy and sell stocks and everything, join Patreon. There is a Patreon link in the description below, $3 a month. It's nothing, but you can talk to me, ask me anything, and see everything in my portfolio. So join it. Other than that, I'm keeping you up to date on what is happening in the market and why it is happening and what I see in the future. Well, thank you for watching, and I'll see you in my next video.